The Australian Financial Review.
It's the bluest of blue-chip Australian companies.
It's a lab, a factory, a biotech startup incubator, a multinational business, and a piece of Australian history.
Regularly praised by politicians and investors as one of our most outstanding global success stories.
This magnificent facility will help position CSL and indeed Australia to compete in the global marketplace.
As the company transformed from a government department into a global biotech giant, its former CEO turned chairman, Brian McNamee, became one of the most influential business people in the country. But CSL has come crashing down to earth.
Well, CSL lost a lot of blood this morning.
CSL was the worst performer on the market today.
Investors were anxious before today's news and headed for the hills when it hit.
At its annual general meeting last week, shareholders voted against its remuneration plan for the second year in a row.
We are disappointed that this will result in CSL receiving a second consecutive strike.
It was an embarrassing rebuke for the company, its management and its directors.
The shares in this former market darling are at a 7-year low. Investors believe its business is way too complicated. Its R&D pipeline is spluttering, its vaccines business is in real trouble, and some investors are even asking if it's time for Brian McNamee to step down.
Welcome to The Fin. I'm Lisa Murray. This week, health editor Michael Smith on CSL's remarkable history, why investors have fallen out of love with the healthcare giant, and what Trump has to do with it. It's Thursday, November 6. Hi Mike, thanks for coming back on the podcast.
Thanks, Lisa.
Despite all of its dramas in the last few months and the big share price fall, CSL is still one of the 10 biggest companies in Australia, yet it's not a household name. Let's start very simply. What does it actually do?
Yeah, CSL executives often sort of joke that it's the biggest company no one's ever heard of. Its market cap actually peaked at close to $140 billion. And for a brief time in 2020, it was the biggest listed company. It took over from the Commonwealth Bank of Australia, but it's now much lower. Its market cap's now about $85 billion. And it's currently the 8th largest company on the ASX. So CSL is a sort of a global biotech company. It competes with some of the largest healthcare giants in the world. And what it does, its core business, is making medicine to treat haemophilia and immune deficiencies, other rare diseases, flu vaccines, and product for iron deficiency and kidney care. So its biggest business unit is blood plasma. So it collects plasma, the good elements of our blood, and it does this through collection centres around the world in the US, China and Europe, where people donate and sell their blood. And it takes this plasma out and then it sends it off to countries like Australia where it's sort of refined and all these good elements from the plasma are actually used to make medicines that treat rare illnesses like haemophilia.
Mike, CSL started out as a government department. How did it grow into a global biotech giant?
It was actually founded in 1916. So the government of the day set up this organisation called Commonwealth Serum Laboratories. Because during World War I, it was really hard to access drugs for Australians from overseas. So the government bought this farm on the outskirts of Melbourne and set up some labs. And at the time, it only had 20 staff and it was sort of focused on treatments for animals. But during World War II, it started making penicillin in Australia.
The Commonwealth Serum Laboratories now produce tons of penicillin each year.
As part of sort of this push to ensure we had the medicines we need during this time of war.
Skilled scientists, engineers, tradesmen are at work to give doctors the tools they must have to defeat disease, to save life.
It also produced insulin for diabetics.
And the demand for the product is growing as more and more diabetes is being diagnosed and diabetics are living longer because of insulin.
And helped produce vaccines to treat polio.
This boy is like thousands of others throughout Australia who have been made safe from polio, and it doesn't hurt a bit.
And then it just continued as a government department after the war, but its history isn't without controversy. So in the 1980s, its blood plasma products actually infected thousands of Australians with HIV and hepatitis C, but the government sort of ultimately indemnified CSL against any legal action arising from the contaminated blood. There's also been a bit of a spotlight in more recent decades on its plasma collection centres. There's been some concern around whether it's exploiting donors from low-income areas or not. And back in the 80s, it was sort of very much run like a bureaucracy until 1990, when Brian McNamee, this sort of young, ambitious, very clever doctor, stepped in. He was brought in and he really shook things up.
So how did he shake things up?
McNamee sort of set about restructuring this very clunky government bureaucratic organisation and turning it into a commercial entity. So by that stage, it had 1,200 staff. It was only valued at about $23 million.
Well, I think that I have a very clear charter to make CSL a commercially relevant organisation.
McNamee doubled down on plasma, which was sort of this unloved and little understood part of the healthcare industry. And he sort of could see at the time that the government ownership was holding CSL back. So in 1994, he listed the company on the Australian Stock Exchange. So there were a whole bunch of privatisations in the 90s, and CSL was actually probably the least high profile. So McNamee agreed to keep the company headquartered in Australia, and it listed with a market cap of just under $300 million. And then he set about acquiring plasma businesses, including the world's second biggest player, Behring. That acquisition really internationalised CSL and made the US its biggest market. So it was well on the road to being this sort of global company. So it now has 30,000 staff and makes about $15 billion in revenue every year. So it's this huge company. McNamee stepped down as CEO in 2013, but he came back as the company's chairman 5 years later, and he remains in that role today. And he's still very, very heavily involved and influential with this company.
So, Mike, as you said, CSL acquired Behring in 2004, and it has two other divisions.
That's right. You have the blood plasma business, CSL Behring, which is the biggest and accounts for more than 70% of the group's sales. And then there's the flu vaccine business, CSL Seqirus. And then there is CSL Vifor, which is a division focused on treating iron deficiency in kidney disease. So CSL bought the Vifor business in 2021 for $16 billion, so a very large acquisition. And some investors say that's where its problems started. They say the company paid too much for it. And even Brian McNamee has admitted that the timing of this acquisition was a mistake.
So let's talk about CSL's recent problems, because for a few decades it was the company that could do no wrong. Governments boasted about its innovation successes, investors piled into its shares. But as you've just said, there are some cracks that started to emerge with the Vifor acquisition. What went wrong for CSL?
It's always been this market darling that could do no wrong, but the Vifor business was sort of struggling to pay for itself for a while, and its performance wasn't really up to scratch, and this was weighing on CSL's share price. But the company was sort of already facing a few significant new challenges. We had COVID-19, which closed borders around the world, so this increased the cost of plasma collection for CSL and really hit its margins. And then more recently, the company had these really big research and development failures. And R&D has always been sort of at the core of CSL's culture and a big part of its business. And the biggest failure was this heart attack drug candidate called CSL 112. Now, the company had billed this as a potential blockbuster and it poured more than $1 billion into it. But in the end, that failed. So that was a real setback. And Brian McNamee, somewhat controversially, also believes COVID was partly responsible for some of its R&D issues, particularly in Melbourne, where it has a lot of labs. So there was this real work-from-home culture that was instilled in Victoria, particularly after the lengthy lockdowns. And he's been quite vocal on attributing that culture to slow progress at its Melbourne labs. And then, of course, we have, Donald Trump comes into power and he started talking about introducing tariffs on pharmaceutical products.
On social media, Donald Trump announcing that branded or patented medicines imported into America are facing a new 100% tariff. That is, unless a company is building a pharmaceutical manufacturing plant in America.
CSL does maintain, though, that it's not going to have a problem. They extract the blood from donors in the US. So CSL argues that blood is then brought back to countries like Australia, where it's kind of refined, and then it goes back to the US. So this is the basis for its argument that they should be exempt from tariffs. And they're still pushing for that exemption at the moment. It's still not exactly clear how that's going to go, and it has weighed a bit on their share price. And then also Trump's causing other problems for CSL with his unusual choice of Health Secretary RFK Jr., who has long been associated with vaccine misinformation. He's seen as an anti-vaxxer.
There's no vaccine that is, safe and effective. They don't have to be tested. And they're not. Not one of these vaccines has ever been tested.
All these combined have posed big challenges for Brian McNamee, along with CSL CEO Paul McKenzie, who decided they'd sort of come up with a plan to turn things around. They've been working on this for a while, and they laid it all out for investors in August this year, but they didn't quite get the response from the market that they'd been hoping for. Almost immediately, investors lost confidence in the company. They were heading for the hills. Its shares plunged 17%, which was the biggest one-day fall since CSL listed on the ASX. And that wiped out almost $20 billion from its market cap, which is more than the entire value of Qantas in just one day.
We're talking about CSL's fall from grace. For decades, the company has been a stock market darling, but in August, after a few years of lower growth, it laid out a plan to turn things around, and the market responded by wiping almost $20 billion from its market capitalisation. Mike, what was in the plan and why did investors hate it so much?
Yeah, look, there was a lot going on and they had a lot of different elements to this plan. So firstly, they announced they were going to slash 3,000 jobs along with $500 million in annual costs. And a lot of this was associated with big cutbacks on their R&D spending. And then they also announced they were going to spin off CSL's vaccines business into a separate ASX-listed group that could be worth as much as $17 billion. So no one saw this coming. And I think it really spooked investors. So CSL had sort of always prided itself on planning for the long term and thinking in decades, not years. It's actually only had 3 CEOs in its history.
Yeah, that's not many, is it, compared to other companies?
This is really unusual in corporate Australia. So it was sort of not one to react to the short-term effects of geopolitics or investor impatience, but this sort of radical surgery, I guess you could call it, it really caught everyone off guard. It's the biggest restructure in the company since the 90s when McNamee took over. So I spoke to Junbei Liu, a founder and fund manager at 10Cap, which holds CSL stock, and she agreed that CSL for decades had held a special place for investors.
CSL has been the main structural grower for Australian investors literally for decades, because it is an incredible success story. Every Australian fund manager's portfolio will always have CSL in it.
And so she said the company's restructure plan and earnings outlook took investors completely by surprise.
And the management up until June has been telling investors, look, things are okay. Market's growing. Sounds like they're pretty confident with analyst expectations and the like. So when the result came, there was just this complete shock.
And she said now investors were actually changing the way they thought about CSL. So previously they were prepared for its shares to trade higher because it was considered a high-growth company, but they're not sure about that anymore. And you could really see that in this massive sell-down in CSL shares.
I don't think CSL will become the market darling again. Near term, there will be a lot of skepticism about whether they are losing share or whether we can clearly identify the next leg of growth.
So, Mike, after that, there was a feeling things can't get much worse for CSL until last week. And then the company surprised investors all over again. How did things get worse for CSL and Brian McNamee?
Well, that's right. Just when we thought the bad news was all over, there was sort of this double whammy. And last week was a really bad week for this company.
Our share price has suffered significantly in recent months. It's been very disappointing for us and for you, our shareholders.
It held its annual general meeting in Melbourne and it gave an operational update, which was not good.
We are revising our financial year 2026 revenue growth outlook.
The company was forced to downgrade profit guidance, which was provided just a few months earlier,
to 2 to 3% from 4 to 5% previously forecasted.
And this was largely due to the outlook for the vaccines business, which prompted this earnings downgrade.
In our Seqirus business, we have seen a greater decline in influenza vaccination rates in the US, greater than we expected.
And it also saw management shelve plans to spin off that vaccines business.
So that great restructure plan all of a sudden was being reversed. And then, Mike, to rub salt into the wound, shareholders voted against the company's remuneration report for a second year in a row.
Yeah, that's right. And that's what is known as a second strike.
We are disappointed that this will result in CSL receiving a second consecutive strike, which means item 5 is a resolution to spill the board will be put to the meeting.
Shareholders then get to vote on whether to spill the board, which means every director would actually have to stand for re-election.
I refer to the slide behind me showing details of the proxy position for this ordinary resolution. So, we passed that hurdle.
So look, they voted against that report, but the board survived the vote for a spill.
That completes all the items of business for today.
But it was still a really difficult day, and you could see that in the share price move. CSL shares, which had traded at over $300 per share at their peak, dropped to $170 in the last week of October. So I spoke to Brian McNamee after the meeting and I asked him what his plans were, whether he would step down. He sort of quipped, it's much more enjoyable chairing a company when the share price is going up rather than down, but we're all in this together. So he was sort of trying to say to us he's going to stay on and his term goes for another 2 years, so he's going to stick around. So CSL's also sort of indefinitely postponed plans to spin off Seqirus, which the company had previously said would list on the ASX this financial year, and that's due to volatility in the US. They said the timing would be revisited when they were confident in the market conditions. So this has sort of really confused investors who never really liked this idea anyway. A lot of them had been quite critical of the demerger because they couldn't see the value in it and they thought CSL was sort of trying to offload this business it didn't really want anymore. And then suddenly they've shelved the whole idea anyway.
Mike, the earnings downgrade was mainly because of the vaccines business, which, as you said, they've now shelved plans to list that as a separate company. How much impact has the Trump administration and its more radical view of vaccines had on CSL's earnings?
Well, that's right. If CSL management are to be believed, the issues with the vaccines business in the US is the main problem for them at the moment. So CSL said it expected a 12% fall in vaccination rates in the US over the Northern Hemisphere winter, and that's going to really hit earnings at Seqirus, which makes influenza and COVID inoculations. So Americans have stopped taking vaccines in droves since RFK Jr. started. He's been slashing public health funding, staffing at key institutions that oversee the promotion and the facilitation of vaccines. And along with all this, there's sort of this anti-vaccine sentiment building up in the US. and all this political rhetoric is sort of filtering down through the healthcare system, even through to GPs and healthcare providers that would sort of normally really push people, particularly families, to get their kids vaccinated every year. And they're just not doing that anymore. So because CSL has already manufactured these influenza vaccines that it hoped to sell in the US during that country's winter, they're just sitting there. No one's going to buy them. So the company said that it's going to be forced to make significant write-downs on this stockpile. And I'm quoting McNamee here. He says, "We can't see the bottom of the US vaccination realities today." So both McNamee and McKenzie are saying the core blood plasma business remains robust. So they're sort of telling investors this is going to shore up the company in the long term. But some investors are sort of worried that even this core business is losing market share. And CSL spooked the market a bit recently when it said it was shutting down some, to quote, inefficient blood donation centres in the US.
So given these concerns around the plasma business, their main business, and the confusion around the vaccines business, do you think CSL can turn things around? And what does it mean for Australia if CSL is no longer a corporate champion?
Look, I think it's important to remember, despite all the current headwinds and particularly the concern around the vaccines business, CSL does remain a fairly robust company. It does have this strong core blood plasma business. So I think it's going to be around for quite a while yet. But there's a lot of different elements at play here. The first is CSL's role in the market and the role of these big blue chip stocks that super funds and other investors are sort of almost forced to invest in because of where they sit in the index. And some of those super funds are now saying that these companies have traded on their laurels for too long and are coasting along and just assuming investors should trust them. And a lot of that trust may be being eroded. Secondly, there was a lot of criticism from CSL's investors in the way they communicated this restructure, how they rammed all this sort of information out in a single day, and the way they've sort of changed their minds about spinning off the vaccines business. So CSL's lost some of this trust it had with its investors over many decades, so they're going to have to restore that. And look, I think the third thing is CSL is a really important company for Australia. It's sort of been this poster child for Australian biotech and Australian healthcare. You've got a lot of great biotech startups in Australia right now trying to commercialise their products, and I think a lot of investors would like to see healthcare become a more significant sort of part of Australia's manufacturing base. But when you've got this big company like CSL with these big manufacturing and R&D operations in Melbourne, when they have a blip, it does send out a negative signal to the market. So that could make it a bit harder for the next generation of biotechs to try and repeat the success of this iconic company.
Thanks, Mike.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray, with Financial Review Health Editor Michael Smith joining the podcast today. The Fin is produced by Alex Gow and Mandy Coolin. Fiona Buffini is Head of Premium Content. Our theme is by Alex Gow. If you like the show and want to hear more, follow us and send this episode to someone you know, as it helps others find us. For more stories about markets, business and power, subscribe to the Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.